Let's talk about the silver market. Because right now, there might just be a perfect storm brewing. We're talking about some massive, powerful forces all converging at once, and they connect everything, from the phone in your hand to these huge shifts in global power. And it all really starts with this feeling. A feeling I think a lot of us can relate to. You work your whole life, right? You save your money, you do all the right things, and then you just watch as its buying power gets eaten alive. It's this quiet sense that the system is devaluing decades of your hard work. And that feeling, well, it's a huge motivator, and it's making people ask a really big question. When the trust in all the paper promises and digital numbers starts to wobble, where do people turn? And that question, that is the absolute core of this whole story. It leads us straight to the first major force at play here, a supply that is squeezed incredibly tight. So to really get what's going on here, you gotta start with where silver actually comes from. And what you find is kind of shocking. The supply is uniquely stuck. You can't just ramp it up when demand goes crazy. It's like a spring that's just getting coiled tighter and tighter and tighter. Get this, a whopping 70% of all the silver that's mined isn't even from silver mines. It's just a little bit of stuff that comes out when you're mining for other industrial metals, like copper or zinc. So think about what that means. Even if the price of silver goes to the moon, copper miners aren't going to start digging massive new holes just to get a little extra silver. The supply is what economists call inelastic. It just doesn't really react to price. And to make matters worse, because prices have been kind of low for years, nobody was investing in finding new silver mines. You can't just flip a switch and get more. I mean, to go from finding a deposit to actually producing metal, you're talking 10 years, maybe more, and billions of dollars. The pipeline for brand new supply, it's basically empty. Okay, you might say, what about recycling? Well, back in the 80s, during the last big silver spike, recycling was a huge deal. But here's the kicker. Back then, $50 an ounce was like having over $200 in today's money. People were literally melting down their family heirlooms for that kind of cash. Today, $50 is, well, it's just $50. The incentive just isn't there, so a really important supply source has basically been turned off. So you've got this incredibly tight supply on one side. But on the other side of the equation, it is the complete and total opposite. We're seeing this unstoppable wave of demand coming from literally every direction, for more uses than ever before in history. Just look at this trend right here. It's nuts. A few years back, in 2016, all the world's industries used up about half of what was mined that year. But the forecast for 2025? It shows that industrial demand alone is on track to eat up 100% of all the new silver that comes out of the ground. That means everyone else, investors, jewelers, you name it, they'd all be fighting over whatever's left. So where is all this demand coming from? It's coming from the very technology that is building our future. Silver is absolutely critical for solar panels. It's essential for the whole green energy transition, for electrification, for batteries. It's in the 1.5 billion cell phones we make every single year. It's in medical devices. It's in all our electronics. See, silver isn't just a shiny metal anymore. It's a strategic, critical component of modern life. And here's another key point that you have to understand. For a lot of these industries, the demand is just as inelastic as the supply. Your phone only has, 30 or 40 cents worth of silver in it? So if the price of silver doubles, or even goes up 10 times, it adds maybe a couple of bucks to the cost of a $1,000 phone. It's a rounding error. They are not going to stop making phones. They have to have it, and honestly, they'll pay whatever it costs. And just when you thought the demand story couldn't get any crazier, a totally new player just walked onto the field: governments. Countries like the US, China, Russia, they are now officially calling silver a critical strategic mineral. That means they're looking to build up their own national stockpiles. This creates a whole new layer of huge state-level demand that just didn't exist before. Okay, so you've got a supply that's stuck, you've got demand that's exploding, but now we have to add a third factor, and this one is a global game changer. There is a massive physical movement of actual real silver from the west to the east, and it suggests that the power to set the price itself is shifting. I mean, just look at what's been happening in China. The amount of physical silver sitting in the big official vaults of the Shanghai Futures Exchange, it's been hemorrhaging. It peaked out at 3,000 tons, and now it's collapsed to less than 600. Now, this silver isn't just vanishing into thin air. It's being pulled out of the system, out of the market, and into private and state-controlled hands. The physical metal is literally being drained.
And this brings us right to the heart of the conflict. For decades, the silver price has been set in the paper markets of London and New York, where it's all about trading contracts and promises. But what happens when the East, who is busy buying up all the actual physical metal, turns around and says, yeah, we're not selling at your paper price? This huge disconnect, this is what the squeeze is all about.
So let's just zoom out for a second and look at the ultimate reason behind all of this. Because a squeeze on a real physical thing like silver, it doesn't happen in a vacuum. It's really just a symptom of a much, much bigger trend, a global crisis of trust in the paper money that governments issue. Look at what's being built in the East right now. It's basically a parallel financial system. China has created this amazing setup where their trading partners can sell them goods and they're paid in Chinese yuan. But, and this is the genius part, they can instantly, on the spot, convert that yuan into physical gold held in a vault. They're essentially telling the world, look, you don't have to trust our promises, trust the metal. It's a direct challenge to the entire dollar-based system. So at the end of the day, it all boils down to this one simple, predictable human behavior. When faith in the system starts to break down, people try to shorten the distance between themselves and real wealth. They run away from paper assets and digital promises, and they run towards tangible things they can actually hold and control. And if you think this is all just theory, history has some truly terrifying lessons for us. Look at Weimar Germany. When their currency collapsed, it wasn't a nice, clean, straight lineup. Notice that terrifying volatility. There were moments when the paper mark actually got stronger against gold, completely wiping people out. But the final destination was never in doubt. It took just 5 years to go from 1-to-1 to 1 trillion to 1. Which brings us all the way back to that central question. When you combine supply that is structurally broken, a multi-layered demand that is absolutely unstoppable, and a growing global crisis of faith in paper money, you have every single ingredient for a perfect storm. And it forces every single one of us to ask, in a world of unlimited promises, what is the real value of something you can actually hold in your hand?